Are you looking for a way to access some of the equity in your home and you're over the age of 55? A lifetime mortgage might be the right choice for you, but how do you calculate how much you can borrow and how much interest will you have to pay? So what is a lifetime mortgage? It's a type of equity release for homeowners over the age of 55. Equity release is a way to borrow money against the value of your home, which you must already own outright. With a lifetime mortgage, you can borrow a percentage of your home's value without having to make any monthly repayments. But how is the debt repaid? The loan and any accrued interest are repaid when the last surviving homeowner named on the mortgage moves out, moves into aged care, or passes away. The lender sells your home, takes the money owed to them from the sale proceeds of your property, and gives you or your beneficiaries any remaining funds. If the debt has grown bigger than the value of the property, the lender can only take 100% of the sale proceeds and isn't allowed to chase you or your estate for more money. Interest rates on a lifetime mortgage can range between about 2% and 8%, depending on the company you use and your age and the property details. But with a lifetime mortgage, interest is compounded, meaning the interest added each month is added to the loan total amount and any interest already accumulated. The debt can grow much more quickly than you might expect. But what if you want to mitigate the growth of your debt and stop it from growing altogether? That's where an interest-only lifetime mortgage comes in. With this type of lifetime mortgage, you voluntarily agree to pay some or all of the interest each month. By doing this, the debt will grow at a slower pace, or it will remain at the same as the original loan amount, providing all interest repayments are met. An interest-only lifetime mortgage calculator can help you to understand how much your lifetime mortgage loan will grow over time, and how making interest repayments each month will mitigate the growth rate of your debt. However, these calculators should only be used as a guide, and you should seek professional equity release advice as part of the application process. Lifetime mortgages can be a helpful way to access equity in your home, but you need to understand the risks and how they're calculated. An interest-only lifetime mortgage might be the right choice for you if you want to reduce the growth of your debt, but be sure to seek professional advice before making any decisions. If you're interested in seeing if you could release equity, simply click on the link in the description below and fill out the short form. It contains a few questions like your property value and date of birth, and it will give you access to quotes tailored to your circumstance. It's totally free to fill out, and of course it won't affect your credit score. So click the link in the description below and fill out the short form to try it out.